How to file your taxes as an S corporation. Let's talk about it because becoming one can be an excellent way to avoid some self-employment taxes and even bring on some investors. However, when you become a corporation, then you're stepping into more advanced tax territory, if you will, and too many business owners are electing for S-Corp status without knowing what to do or how it will impact them. So in this video, what I want to do is talk about how S corporations actually work, how to elect to become an S corporation, how to file your tax return as an S corporation owner, and much more, like how to stay compliant, some important tax deadlines, and so on. Now, before I dive in, I want you to know I'm gonna have timestamps for the video somewhere down in the description below so that you can go back and review anything you need to or skip ahead if you're already comfortable with some of the information. All right, let's go ahead and get started with number one, how S corporations work. You may hear S corporations referred to as small business corporations or subchapter S corporations or simply S corps, which is what I like to say. It's all the same thing. Now, first off, you should know that an S corp is a tax designation granted by the IRS. So you don't register an S corporation like you would an LLC, for example, but rather you would tell the IRS you want to be taxed as an S corporation. Okay, and I'll talk about a little bit later how to do that in this video as well. Now, in order to change your tax status, you must have an existing LLC or an existing C corporation, meaning that people who are simply sole proprietors or 1099s cannot make this election. Also, certain types of businesses cannot become S corporations like financial institutions, insurance companies, and sales corporations. Okay, now when you elect your LLC to be taxed as an S corp, you still get the same limited liability protection, ownership, and management advantages that you would with an LLC. Plus, you have the added benefit of being able to issue shares as common stock to your employees or investors and have up to 100 shareholders. Okay, let's go ahead and move on to number two and talk about why would you want to become an S corp. So the main reason people elect to become S corporations is to avoid self-employment taxes, which can be taxed up to 15.3% of your total profit when you have a regular LLC. For example, very simple example, a regular LLC with taxable income of $100,000 would pay $15,300 in self-employment taxes. However, with an S corp, taxable income is divided into two parts, a distribution and a salary, because S corp shareholders can be both owners and employees, which means you have to pay yourself a salary. So now you will only pay self-employment taxes like your Medicare and Social Security taxes on the salary portion. For example, let's say you have an S corp with taxable income of $100,000 and you pay yourself a $50,000 salary and take a $50,000 distribution. Well, now you only need to pay the 15.3% self-employment tax on the $50,000 salary, which is $7,650 as opposed to the $15,300. You pay no self-employment taxes on the $50,000 distribution. Does that make sense? Leave a comment below if you have any questions, and make sure you like this video if you enjoyed that breakdown. So altogether, you're able to exercise a bit more control over your taxes, and the lower salary you have, the fewer taxes you have to pay, right? Well, here's a very, very important note. Okay, I don't want you to get in trouble with the IRS, so you need to know this. When you have an S corp, you have to pay yourself a reasonable salary. So don't try to cheat the system by paying yourself like a $100 wage or something like that. No, instead, you should strive to pay yourself the same thing you would pay someone else who you hired, who worked in your position full time. So avoiding self-employment taxes is the big benefit of becoming an S corporation. Now, does that mean everyone should elect to become one? Absolutely not, because there are some cons, right? You have more administrative tasks. The cost of doing your taxes increases a lot. You also need to be making enough profit for it to even make sense. Plus, there are some strict requirements and limitations. For example, you don't want to buy a rental property with an S corporation because now you face tax consequences each time the property ownership is transferred, even if you are simply transferring the property from your S-Corp to yourself as an individual. That's why it's very important to work with a tax professional when dealing with these more advanced structures. Which, by the way, if you need help with tax planning or tax preparation, our team may be able to assist you. Go ahead and click the first link down in the description below to learn more about how we can help you. All right, let's go ahead and move on to number 3 and quickly clarify S corporations versus C corporations. Because oftentimes people just hear the word corporation and think they're all the same, but that is not the case. Let's compare. So a C corporation or regular corporation pays a federal corporate tax rate, which is currently set at 21%, which means that all profits of a C corp are immediately taxed before it reaches the individual business owner. Whereas a S corporation is a pass-through entity, meaning that you pay taxes on the profits at individual tax brackets or individual tax rates. This can be a pro and a con depending on your tax strategy, because C corporations can be subject to double taxation, being taxed twice, one time at the entity level and again on the individual level once the owner decides to take dividends or distributions. On the flip side, S corporations do not have double taxation because profits pass straight down to the individual, which makes it a bit more difficult to reinvest your business profits, whereas C corporations have much more flexibility to reinvest. Another big difference between the two is, remember when I said earlier that an S-Corp can have up to 100 shareholders? Well, that is very cool compared to other entity structures, but when compared up against the C-Corp, well, C-Corps can have unlimited shareholders and offer various stock options. So those would be some of the major differences between an S-Corp and C-Corp, but overall, these are two very powerful business entities and should be used strategically. So if you are sold on becoming an S-Corp, let's go ahead and talk about number 4, how to change your tax status. To file or elect to become an S-Corp, remember that you first must have a regular LLC or a regular corporation. Once you have that, then you must submit Form 2553, the election by a small business corporation, and send it to the IRS, signed by you and all your company's shareholders. Once it's signed and sent to the IRS, then usually within 6 months, you'll receive mail correspondence that will confirm your new tax status or what you need to correct, or if you're completely ineligible due to your business type. Now, if you are serious about becoming an S corporation, then I have a very affordable mini course where I walk through how to convert your LLC into an S Corp, including filing Form 2553 and how to stay compliant and much more. So click the link down in the description below if you're interested in that. Okay, let's go ahead and move on to number 5 and discuss how to file taxes as an S Corp. So filing taxes as a corporation is much different than any other tax filing. For starters, you must use a completely different tax form from Schedule C or 1040, which most people are used to, and instead use Form 1120S, the U.S. income tax return for S corporations. The 1120S is a 5-page form which looks like this, and page 1 is divided into 4 parts. Part 1 has fields A through F, which is where you'll input your contact information, dates of incorporation, your S-Corp election, your assets, and so on. Part 2 is your income section, which will ask you all about your company's revenues for that tax year. Part 3 is the deduction section, where you record all your business deductible expenses for that tax year. And then finally, Part 4 is the tax and payment section, where you'll go ahead and list out any estimated tax payments you paid during the year, and then calculate any taxes you owed or overpaid when you were switching your tax status. Now, before you prepare your tax return, your 1120S, you'll want the following information. Okay, of course, you'll want general information about your business, such as the date you started and the date you elected to become an S corporation. You'll also want your business activity code and your employer identification number. You'll want to bring along your profit and loss statement and a balance sheet. If you have partners or shareholders, you'll also want their personal information and any information about payments you made to independent contractors totaling at least $600 for the tax year, as well as your W-2 employee wages. Now, once you have all those things in place, then you or your tax preparer are in a pretty good position to go ahead and get started with your tax return. Now, in addition to those 4 parts, you also need to complete 3 mandatory schedules. The first is called Schedule B, or Other Information. This is where you as the taxpayer must answer a series of yes and no questions about your business accounting methods, the stocks you issue, and much more. Then you have Schedule D. This is where you report any capital gains or losses your S-Corp may have incurred throughout the tax year. And finally, you have Schedule K, which brings together all the information about your business, the gross income, the qualified deductions, any tax credits you qualify for, and then puts it all into a neat Schedule K. Schedule K1 basically summarizes the overall business profits so that shareholders can report their distributions on their personal tax returns. So if you have multiple partners, then each partner will get a K1, and if you just have you in the business, then of course you would give yourself a Schedule K1. Now, most online tax softwares focus on individual tax preparation and some self-employed taxes, but it's very difficult to find an online tax software that lets you file your S-Corp taxes, which goes to show you the difficulty of filing these types of tax returns and why you may want to seek a professional to help you. All right, now let's go ahead and talk about number 6, how to stay compliant as an S-Corp owner. Now, this is a very important part in the video, okay? Everyone wants to save on taxes, but look, if you aren't compliant, then all the effort you're putting into changing your tax status can be reversed, which means that in the event of an audit, not only will you lose your tax savings, but your income can be reclassified as wages and you will have to pay back what you saved, which causes unnecessary headache on top of all your other business tasks and all your other business stress. Now, the big thing people lose their status over is not paying themselves a reasonable salary. To highlight this, let's look at a tax court case, Glass Block Unlimited versus the Commission of Internal Revenue. So a man named Frederick was the president and sole shareholder of his S corporation, where he sold and distributed glass blocks. The S-Corp had full-time employees, and Mr. Frederick was responsible for all the operations of the company. During one tax year, it was discovered that he did not pay himself a reasonable salary, yet he received $31,644 in distributions that were not subject to self-employment taxes. However, the IRS spotted this, and the court found that any officer who performs more than minor services for a corporation and receives salary in any form for those services is considered an employee, and his or her wages are subject to employer's payment of federal employment taxes. In other words, the tax court decided his $31,644 distribution was instead a $31,644 salary because he was the sole employee responsible for all the business income, which means he now has to pay taxes on the $31,000 distribution and pay interest for not paying his taxes during that period. And look, I don't want that happening to you. So to stay compliant as an S-Corp owner, here are a few important things you want to make sure you do. Number 1, pay yourself a reasonable salary. Number 2, file your taxes on time and accurately. That's federal, state, and local taxes. Number 3, keep up with annual registration and business license renewals. Number 4, hold annual director and shareholder meetings while recording your meeting minutes. Number 5, maintain proper record keeping of all your income, all your expenses, what you pay your employees and your contractors, and so on. Doing these things should keep your S-Corp in good standing. Okay, so the big question we're always asked is, number 7, should I become an S-Corp? And of course, the answer is, it depends. Okay, but I'll go ahead and give you some general perspective. The decision really comes down to 2 big factors in my opinion. A, if you're making enough profit, at least $60,000 after expenses and deductions. And B, if you plan on taking profits out of the business, or if you plan to reinvest profits back into your business for more growth. If you are making enough profits and want to take money out of the business, then an S-Corp is something you should seriously consider. On the flip side, if you're making enough profits, but you plan to continue to reinvest into your business, then maybe an LLC or a different business structure altogether would be best. But remember, this is general perspectives, and it definitely depends on your business, your situation, your income, and much more. And keep in mind, while becoming an S-Corporation corporation is a great way to save money on taxes, there are definitely other tax strategies you can implement other than becoming an S-Corp. Okay, so was this helpful? If it was, make sure you like the video, go ahead and hit it for the algorithm. It really does help other business owners like you find this content. And remember, go ahead and subscribe if you want to see more. Coming up next, I have 2 more videos you may enjoy as well, so check those out if you haven't already, and I'll see you over there.